All right. Hi, everyone. Welcome to another Facebook Live. I hope this is actually working since I am not with my co host today. As most of you know, my name is Maria Mejia, and with me today is.
Alicia Purdom.
There we go. So great to have you on here. Alicia is one of our bookkeepers here at Your Financial Success Matrix, and she's just amazing and gets a lot of work done. David wasn't able to join us today because he was not feeling 100%. So, hope he gets better by next week because I'm going to run out of things to say. So I know we had scheduled to talk about lean canvases today, but since David's not here and he's kind of the expert on that, I thought me and Alicia instead could talk about the next tax tip that we have coming next week. So here's a little preview, and it is on commonly missed tax slips. So, yep, David's watching from the sidelines, so no pressure.
That's right. So one of the most common tax slips that are required to complete your taxes is the T4 slip. Maria, would you mind explaining what the T4 slip is and where you can find it?
Yeah, so the T4 slip is formerly called the Statement of Remuneration. I cannot say that word. Pretty much of income paid, or as we just call it, the income slip. It's what your employer gives you if you are an employee, and it states, how much income you made for the year, as well as any withholdings. More specifically, your tax that your employer withheld, as well as the CPP and EI. Those are the most basic things that are on there. But as well, if your employer withheld any union dues, any medical, for example, if you were on their insurance, or any donations, since some businesses do that as well, that will be reported on the T4s. And they can be found, so your employer should be giving them to you as they are due. For the employer is supposed to file them by the end of February, so you should be getting them between now and probably mid-March. And if you don't get them, if they're not mailed into you, or you don't have a client portal that your employer uses, you can always log on to My Account on the CRA website and then click on T-slips or tax slips, and it will have a list of your T4s and other tax slips on there.
That's great. It makes it so convenient to find all the information that you need. And for most, a lot of people, that's pretty much the only slip they're going to need, right?
Yeah. And it's very common, especially right now, with people having multiple jobs, either multiple employed jobs or one self-employed, one employed. It's very important to make sure that you have that income, because if you don't report it on your tax return, but the CRA has it, they're going to be adding that income into you, and you might be hit by a tax bill instead of be receiving a refund. So it's important to know and to keep track of all of those.
Absolutely. That's right. Now, some of the other common slips that we can talk about today, there's the T3, the T5, and the T2202. Do you want to start with the T3 slip?
Sure. So the T3 slip is not very common. For the average taxpayer, it's called the Statement of Trust Income, Allocations, and Designations. So it looks similar to what a T5 slip is, which I'll be talking about in a second, but it has, information of the income from a trust account. So the T3 slip is separate from what is called a T3 return. So the T3 return is what the actual trust will file. It's kind of like their version of a personal tax return, the same as how a business has to file its own tax return. A trust has to file its own. There's a lot of different returns that need to be filed. So at the end of the year, the trust will file a T3 return. And then if you are given money from that trust, you will receive the T3 slip. So try not to get that confused. And so, yeah, it'll have, any income that you earned from the trust, any dividends that you received from the trust. And that should be given to you at least 30 days after the year end of that trust, which normally is the, December 30th. Yeah.
Right. All right, that's great. That's a lot of great information. Now, you're saying that the T3 slip is very similar to the T5. Would you mind explaining what that one is and how it differs a little bit?
Yeah. So the T5 is called the Statement of Investment Income. So the T3 is income you received in a trust, which is, a completely separate entity. It's kind of like a business where it has kind of its own rules. Whereas a T5 is what you receive from if you have an investment account, such as your bank account. So like I bank with RBC and I have a savings account with them. I receive a T5 slip from them at the end of the year, letting me know how much I earned in interest. If I had an investment in a business that paid dividends, then they would be sending me a T5 slip, letting me know how much dividends they gave me, as well as how much of that I can use as a tax credit, depending on the size of the business. It's very common for those who are quote unquote self-employed but have their business incorporated. They choose to have the payment through a dividend instead of through a wage or another form. You can claim some of that dividend since your business is small. You can claim some of that as a tax credit, so it'll help decrease your overall bill. So it's good to keep that in mind when it comes to tax planning if you are thinking about being employed and if you're thinking about either incorporating your business or keeping it as a small business just yourself on your return.
Okay, yeah, it's always great to look for help where you can, right?
Yeah.
So all that information can really benefit you if you have it all to try to get, all the credits that you can, and hopefully not owe is the goal, right?
Yes,
Yeah.
for sure. Yeah, you want to be able. Sorry.
Go ahead.
Yeah, you want to be able to make sure that you don't. So most people think of a tax return being like, okay, so I file my taxes and I get a giant refund. That's great for me. But in reality, that whole amount of refund is how much the government has been able to, how much of your money the government has held on to throughout the whole year. So in reality, you don't want like a giant refund. You want a zero return. So yeah.
Right. Now, one of the other forms that we wanted to talk about today, the other slip, is generally geared towards students. So all you students out there, this one's an important one, the T2202. Would you care to explain that one for us?
Yep. So the 2202, as I like to call it, is a tuition and enrollment certificate. So this pretty much states if you're enrolled in an eligible education institution, so that can be a college or university or any other institution the government has given permission, basically stating, how long you were in school, how many months, if you're part-time or full-time, and the amount of eligible tuition you paid for that period. And then you can claim this as a deduction on your tax return, meaning it will help decrease the amount of taxes that you'll be owing at the end of the year. But something special about this one is that you can also transfer it to another family member. So if you were a student and had a spouse that was working to kind of support you, you can let them use that tuition credit since, you were served the full time, you weren't earning too much. So that's an option. Or you can even transfer it to your parents if your parents are the ones supporting you.
Okay, that's great to know.
Yeah. Something else that kind of goes hand in hand with is the student, the bursaries and scholarships. I know a lot of students nowadays need to have, that extra little help to, pay for those tuitions. Most of the time, scholarships and bursaries and things like that are taxable. And so you'll be given a tax slip for those. It'll be on the T4A, the statement of other income. But if you if you got a scholarship for, let's say, you're in a fine arts program and you got the scholarship for the fine arts program in your school, you may be able to claim that as a deduction, so they'll be able to offset each other. So in reality, you wouldn't be taxed on that bursary or scholarship.
Okay. All right, that's some really great information, Maria. Do you have any other tax slips that you feel would be relevant for us to share today?
Yeah. So since we're last talked about the students' ones, your student loan, they don't have a tax slip per se. There's not like a actual name tax slip that they give you, but they'll kind of give you a statement saying how much you paid in your student loans. And how much the interest was. That interest is tax deductible. So there are some credits that are like that, such as medical donations and other things that don't necessarily have like a formal tax slip, but that they will give you like a statement at the end of the year letting you know how much you can claim on your taxes. So you got to keep an eye out for those as well. So definitely, talk to a tax professional. They have a general idea of what those statements might look like or where you can look for those statements.
Yeah. Okay. Thank you. I have my own little student over here who's worrying about these slips in 18 years. So
Get a head start on
I apologize for the background noise.
It's all good. Looks like we had a question from David all the way from home.
All right, let's hear it.
Yeah, so he said, how easy is it to sign into My CRA? Alicia, have you ever signed into My CRA?
I have. I prefer to use the method of signing in through your banking institution. That's how I normally do it. Now, there are a couple other ways as well. I believe there's one to sign in as a partner, and another one, it's a key, sort of key. But I usually use the banking one personally. And they have a two-step verification, which is great. So it's nice and secure. And yeah, you just use your online banking login information. You can get in there, and it's pretty user-friendly. I've been able to find all of my stuff with no problems. Tax slips, tax returns, any communication that they may have with you. It's nice and easy to find it right on there. It's a great, useful tool, especially when it comes time to do your taxes.
Oh, yeah. Yeah, definitely. Like you said, log in with your banking institution. Or if you don't have a online banking login, you can also have a username and password type login, which is the key that Alicia was talking about. So there's multiple ways that you can do that. And if you are having difficulties logging into My CRA, usually it's due to not having the correct information that they need to sign you up. So if you haven't signed up, have your last tax return that you filed, have that handy, because they will be asking you questions on the numbers of certain lines. And as well, if you don't have that information, talk to whoever filed your tax return last, or even talk to an accountant or any other person who can be a representative for you through the CRA. So, for example, I'm an authorized representative, so if I get authorization from a user, I can access their CRA information. That way, if they don't want to bother into the login information, I can just quickly go on and be like, okay, these are the tax slips. No need to worry. You don't need to send me anything this year. So, right. talk to
convenient.
Yeah. Well, do you have any other questions, Alicia, before we sign off? Questions, comments?
This was super informative for me. Anybody out there watching? Do you have any questions for us?
Yep. Well, no questions yet. So, well, thank you for joining us live, or if you're watching the recording, thank you for watching us recorded. Remember to like, share, subscribe, and let us know. Leave comments of either questions of things you want us to cover next time, or let us know if you don't agree with something. We're always up for discussion. So we will see you next time, next week, and with David. Have a good day, everyone.
And just remember, if you don't know where you are going, any road will get you there. All you have to do is ask us. Have a great day, everyone.
Bye.